September 16, 2019, guys. Good morning. It's a beautiful Monday. Hey, 200-point drop could actually take place by Friday in S&P. So expecting a bloodbath to begin around 2:30 on Wednesday. Now, when we're saying 200 point, that is sort of like the best case scenario. So overall, we are expecting a drop of the Federal Reserve rate announcement. But considering some of the extra headlines that are occupying everybody else's mind today, market looks bearish this morning, but we are actually temporarily bullish, meaning we're not trying to buy a ton of put options this morning as it looks like the bottom is falling out. We're actually expecting a move higher first. Now, the question today, of course, everybody's asking, who the hell blew up the Saudis? And the answer is it's not Iran. And it's not the Russians, because just a couple of videos ago, we showed you the analyst report from the Russian analysts actually predicting oil was going to drop to $25. We still think long-term they are correct. But the ultimate answer is Trump blew up the Saudis to temporarily increase the prices. The question is he day trading this move or is he swing trading it? We're more leaning towards the part that he is swing trading this move. Therefore, we think there's actually potentially another blow up that will take place, as everybody's saying, like, okay, this could impact the oil supply for maybe 5-6 weeks. We think this could actually escalate to a bigger situation here, and therefore oil prices will be temporarily artificially inflated. So despite, however, the market drop pre-market so far, at the lowest point, it lost almost a little over 20 points on S&P. We think the market will be spiking higher as soon as the market opens. So do not buy puts at the market open. Expect a bounce as in a move 11 type bounce. Now, as far as oil, we're going to break down the oil trade, some of the best stocks to actually trade oil futures on. So here's the big list for this morning. Shopify and Roku, as far as the technology sector, they remain the top two shorts. FANG, not to confuse it with FANG stocks. FANG, F-A-N-G, is actually an oil stock, oil-related stock. You want to buy calls on this on any pullback. CXO is another oil stock. You want to be buying calls on this on any intraday pullback. A little bit more information on the AZO trade we started talking about Friday. ALGT, anything that is transport related, airlines, transport companies, oil prices go up, their earnings go down. So that trade is pretty basic, but we're not expecting any crazy wild moves. ALGT, we've talked about it briefly about 5 days ago, as a potential for a short on this one. And we think this could be a good time to come in. It looks like on the chart it's creating a double top pattern. So this may be a good entry right around this 149 level, 150 level. BKNG still remains one of our top picks for shorting it, but it certainly is trying to go higher, continuously go higher on lower volume. So ultimately, it will have a strong move lower, but we're going to take it easy and observe it till some clear signs of a reversal begin. So be ready to trade it, just don't trade it yet. Roku, CMG, Amazon, all of these are pretty self-explanatory. So I'm going to spend a bit of time talk about oil situation. So pre-market, it's got a quick run to the 61 level, then retreats back to 58.91. It is likely to actually move higher back to that 61 area. And the question is, what will happen next from there? Because if it does maintain a level high for a couple of days, it does create a new trend, a bullish trend for oil. But if it just hits that 61 level today intraday and it starts reversing back to the 59 level, 59 area, 58 area, then, even with all this oil supply shortage created overnight, basically, oil prices are hesitant to move higher, which is actually going to be hugely bearish. But we're not looking to put any kind of crazy long-term trades here, guys. We're just going to trade this short-term. We're going to stay in these positions for 2-3 days. Basically, this move right here on the chart tells us that it makes sense to buy some call options on oil-related stocks on pullback. So as you can see, this is the beginning of move 7. So you got a pop when oil price drops back to 58. You see they're buying this pullback. It's in a move 7 formation. Later, it's gonna, throughout the day, it should be climbing back up higher. So use that. Basically, this, when you see oil stocks, and I'm going to show you a few really good ones in just a second. When you see oil stocks do this today, what you want to do, instead of shorting them, you actually want to come in and buy these pullbacks and wait for a bounce. Okay, now the best type of probability as far as that is the fact that they could be going higher for like 2 or 3 days in a row for a nice quick swing trade. So it does coincide, the level of 58.61 does coincide with a major resistance on the chart. I'll show you that in just a sec. It's important to see if oil will move higher 2 days in a row after today and break above 62-63 area. That would actually establish that uptrend that we mentioned about a second ago. So unless, however, it does break above 62-63 area, then consider this just a short-term spike that you will notice institutional investors will come in and short. This is the area of resistance at the 61. We've gotten up, so clearly to 61 pre-market. This chart does not reflect it. It shows you the data as of the previous trading day close. But you can see many times we've gotten to this 58, 59 area. We have failed to break above it. So if we close at 61 and go to 62, 63 area tomorrow, this gives us a chance to actually clear the 66 level in the next week or two and ultimately possibly get back up to that 70 level. So the bigger move already has taken place, however, so be very cautious. Don't trade some huge positions in oil stocks, but you do want to take a bite out of that action that the market is giving us. So here's one bullish thing to consider, and mainly the reasoning why, besides buying these options, call options on the pullback, is the fact that this may not be the last attack. In other words, the reason to be buying these call options would be in the expectation of another attack. And so if we live in a world where a drone attack could take 5% of oil supply, world daily oil supply, I mean, this is pretty amazing. I mean, who's to say that there's not another attack that has been already planned? Now, whether it will get executed or not is another story. But if somebody has put this show together, it's like that there's going to be another attack, not just one. So another 5% move in the oil stock price, price, could actually result in another sharp gap higher over the course of the next few days. Now, if that does not take place in the next 72 hours, then we're definitely cutting the trade. We're not just going to be sitting and waiting for another oil attack from there. So here are the best oil stocks to buy calls, guys. PXD is probably my favorite right here. PXD, Pioneer. EOG is another good one. FANG and CXO, we just briefly mentioned them. Here's what they're doing so far pre-market. EOG up from 79 to 85 bucks. So I would maybe wait for a pullback to like 83 level and buy some calls right here. On PXD, it's up to 147, 146 from 135. I'd wait for a pullback maybe to like 142 and a half, 143 area. Buy some calls right there. And when I'm saying buying calls, guys, just buy in the money or close to the money. Don't get carried away trying to buy, out of the money calls. They're going to be super expensive. You don't want to buy a bunch of out of the money calls and expecting another huge move, another explosion, and it doesn't take place. So the out of the money, they're going to take a very quick hit rather fast. So you don't want to use that strategy. It only works if another major crazy move is going to come. So you'll actually see a lot of people selling out of the money calls in order to profit, because they're going to decay rather rapidly if there's no follow through on any further attacks here. So with that said, FANG, it's probably my second favorite. 105.22 pre-market, up from 96. Wait for a pullback to 100, 102 area. Pull the trigger. Maybe start buying some around 102 level on a pullback. Buy 100, 102, 105. Strike calls, but I wouldn't go and buy some crazy like 110 or 115. And CXO is another great one, guys, up from 74 to 80 bucks. Just wait for a couple of dollars drop right here, maybe back to the 78 level. That would be a good area to come in. Now, I mentioned AZO trade from last week is becoming more interesting because after the upgrade on Friday, the stock does manage to go 20 bucks higher. But look at the volume, substantially lower volume. That actually creates a characteristic for this def hook to actually materialize on MACD into a def cross over the course of the next few days. So we are monitoring this trade very closely because we think if today the stock would get to 1160 area, it would be an ideal way to come in, ideal entry point right here. If you see AZO at 1160, 1162, 1165 area, start buying puts on this thing because it is likely to flop easily 40 to a $60 drop by Friday. So this could be a highly profitable trade, guys. Okay, as far as the levels, okay, we've mentioned that the market was going to struggle with the 3020 level on Friday. It did hit both of our target levels, actually at 3008 and 3004. If you haven't watched that video, review those levels. We're not going to spend a ton of time in this video talking about them, but this is basically what we're targeting. Level next one we're considering after the pop. I think we're heading in the next few days to the 2946 and 2922, 2905, 2891. Now, when we mention the 200-point possible drop, we can actually see the market at 2775. 2775 would be that crazy level if we do go down another 200 points. So September 13th, the market move was a move to, not a grand magnitude. It was actually a small magnitude move to, guys. We basically popped, dropped, pop, drop, pop, drop, and that's what the market kept doing throughout the day. Pop and drop type behavior was predominant through pretty much entire trading day. 11-2 is a 2-day sequence. Now, this is definitely when you're starting to get a couple of days in a row that are topping type moves. It tells you that a big drop is really near, and it is in the making. Even knowing and understanding that does not guarantee you a perfect trade. What does guarantee you a perfect trade if you time your entries properly? So understanding that today is a high probability of a move 11, guys, we strongly suggest wait for the market to pop before you come in and you buy puts. Not puts on the oil stocks, but basically other names that we've been mentioning in the last few videos, including this one. So this is how 11-2 looks on the chart. Clearly, you see we're not messing with that level of 3025, 3020 very long. As soon as the market opens up, we start going lower, start getting lower. That's a really weak type of market environment because we could have easily attempted to take that 3025 level established pre-market on the way higher. We didn't even get near that. So that by itself, before all the oil news broke out on Saturday, the market was just acting weak, and it's been acting weak a few days in a row. If you look at the prior move 11 right here, it's a clear pyramid. I think we're going to get exactly this again today. Just it's a variation of a move 11. Guys, if you have not studied the 13 market moves course entirely, if you have not gotten to move 11, please review this because it's a super important move right now, and it's actually crucial that you understand how to trade this move on a daily basis. 5-day sequences 2, 4, 7, 11, 2. Again, we're back to that environment, but at a much better level. We had a move 2 just 4 days ago, followed by a couple of bullish moves where it looked like they were buying the dip, but in very tiny volumes. And now this topping type move formations are, really taking over again. So this is the time to get ready. That is why we don't think it's crazy to see the market drop 200 points within a rather short amount of time. It appears like we've got plenty of catalysts, including the Fed decision, that could actually produce a few days sell-off. I'm not saying the market will drop all of a sudden, 200 points in one day. What I am saying, we could see maybe a drop of like close to 100 points one day, and followed by a couple of more days lower to the magnitude of like 50 points a piece on S&P, and that could get us. Now, that's a very aggressive estimate, guys, but overall, basically, if the magnitude of the drop is not going to end up being this substantial, just know that the overall at these levels, it makes sense to be a bear rather than a bull. This is the head and shoulder that we're noticing in this 5-day sequence, guys. And if you analyze closely these levels on the volume, when we get this drop slower, this is when the volume spikes, right? Towards the end of the day, we're having that move 6 within the move 11 right here. Again, pre-market, right? Today, we're selling off on stronger volume. We're selling off on stronger volume going to the close there. This head and shoulder pattern has been showing up very consistently over the course of the last couple of weeks. Yes, it's been reversing and going the opposite way in these bullish moves like a 4 or 7, but it keeps showing up. And learning the history of these market moves, it does not continue to show up here for no reason, guys. It's definitely worth to pay attention to this, because if you short the market on the pop and you get your entries right, this is going to pay off handsomely, very nicely for many of you guys. So expect the market to stall and reverse near that 3020 level. That was the note we've posted in the video on Friday. What we're expecting today actually is not for the market to visit that level of 3020. We think it's going to revisit the level which was our target level on Friday, which was 3008. 3010 level, and it's going to look like this. So right now, pre-market, we're lower. We're in the negative, like 10, 15 points. So market's actually going to do this, and then it's going to fade into a move 11 type of formation. So what you want to do is you want to wait till we get to that level of 3008, 3010. You know, this is just a very basic drawing to give you an idea that a pyramid will be created today throughout the trading day, but just what is not clear is whether we just going to jump right away to this 3008, 3010 level as soon as the market opens and then sell off. Then the pyramid would really be created closer in the beginning of the day rather than the middle of the day as portrayed here. So just remember, at some point when you start seeing the pyramid, it's time to buy puts. Okay, next market move. Clearly for today, we are expecting a move 11. It was just drawn out for you. So VIX. We mentioned that VIX was about to go higher because we're noticing some bullish reversal candles, and that's indeed what VIX is doing today after creating the last down day on a Friday. Now we believe VIX is beginning a longer-term uptrend where the ultimate target is going to be around 32 level. So expect a close in the VIX above 16 in the next 48 hours. That's what we're going to be paying very close attention to. These were the bullish reversal candles that kept showing up over the course of the last couple of days. We said, look, when you see this, it basically gives you a higher probability that the VIX is going to reverse and spike higher instead of continuing to move lower. That's exactly what happens today. Now, clearly, when we're looking at the chart of the VIX a couple of days prior to this oil situation that everybody's talking about today, we did not know that it was the oil situation that was going to spike the VIX, but it was nonetheless. All the signs were there in the charts pointing to a VIX higher. So that's what we got so far. Pre-market, VIX shot up to a 15.29, currently trading at 14.99. So what we're seeing when the market opens, expect a pullback lower in the VIX, maybe to about a 14.5 area, followed by a bounce higher by tomorrow, definitely by Wednesday. So how do you play that? Basically, you just want to buy VIX calls, guys, with all the potential catalysts over the next few days. You know, the market is going to be doing some wild things. And one thing for certain that will go higher is VIX. So this is probably the easiest trade. Anybody can take advantage of this trade, guys, no matter how small your account is. VIX contracts, they're not expensive. You know, just make sure you buy. I would say buy next week's expiration. Like next Wednesday expiration. They're actually going to expire Tuesday. Buy them close to the money. I mean, you can easily buy maybe VIX 15, 16 in the expectation that we will break above that 16 level. So with that said, key takeaways, guys, nice and easy. Short intraday bounce to 3008, 3010 area. Buy all stocks, calls on a pullback by VIX calls, short tech stocks, particularly Shopify, Amazon, Roku. Keep short those on bounces. Watch for move 6 type behavior into the close between 2 and 4 p.m. This could be your most profitable hours of the day. With that said, guys, make it an awesome trading day, and I'll catch you on the next trade tomorrow.